Hey folks, Dan Frio here with your Mortgage Minute. So everywhere in the news today, we see recession and inflation. So let's break this down briefly. What is a recession? Well, basically the definition of a recession is 2 quarters in the United States of negative GDP. Okay, so we have that confirmation today that the first quarter of 2022, we had a negative GDP, and actually it was revised worse. All right, so the next piece of this puzzle is inflation. So we're going to also talk about what's causing inflation, and one big piece of that is too much money in the system. If you don't believe me, watch any of the financial channels. So let's get on to the news to see what the news has to say about all this. So the first thing we come to is the economic calendar, because we do this every day to figure out what's in the news that will affect the markets. Okay, so we see right here, GDP just came in a revision. So what happens with the GDP number, right at the end of that particular month or that quarter, there's a reading on GDP. So again, let's recap what a recession is. The true definition of a recession is 2 consecutive quarters in the United States of negative GDP. Okay, so this is confirmation that the first quarter of 2021, we were negative. Okay, so let's get to that revised number. So what they do is they come out with a number right at the end of the quarter, then they revise it a month later, and then they do one final revision to double check, triple check, and quadruple check their information. You can see right here, the previous reading was 1.5, secondary reading was 1.5, sorry about that, and the final reading is negative 1.6, so worse than we thought. Okay, other news right now is Federal Chairman Powell is speaking in front of Congress. I'll keep you updated on that. And then one huge piece of this inflation mix is paying at the pump. So what's going on with oil prices? You can see hopefully at the pump lately, oil prices and gas have been coming down. So let's go over to this. And again, all over the news, all you see is recession, inflation, and the whole mix. So this says right here, GDP contractions deepens given fresh recession clues amid soaring inflation. Okay, so based on that, let's break down first what's causing inflation. Right here, a headline that just came out today. So let's break down through this. Remember some of the stuff that we just talked about a minute ago. So keep that in the context. Gas prices, okay? So what President Biden just recently came out and said, Exxon's making more money than God. All right, we'll do something about it other than maybe just send them a nasty letter. You know, maybe step in and try to do something, okay? Especially for the first year of the inflationary shock, basically from very early 2021 to the end of 2021, if you track profit margins, those margins have been getting much, much, much fatter. And I can guarantee in 2022, they've gotten excessively fatter. Okay, so that needs to be something or addressed. The job market. Well, look at it. You got signs now they're trying to hire even 16 and 17-year-olds to fill these places because it's just very hard to find employment or fill jobs, especially in the minimum wage areas, okay? So that is also a huge concern in the economy. The next piece of the puzzle is what caused inflation. Remember, what caused inflation is the pandemic relief. Pandemic relief payments put a lot more money into people's pockets than they otherwise would have had. Okay, and I'm going to show you a little graph on that in a second. And then the Ukraine war. I hate this, and this is bad to say, but I think a lot of our companies are using this as a smokescreen, such as the oil companies to say, oh, you know what, because of this Ukraine situation, oil's really bad, so we're going to have to jack up those prices. Well, just above here, we saw that those prices have been escalating and their profit margins are really fat. Okay, so we got gas, we got the jobs market, we have pandemic relief, so stimulus by the government, and then we have the war in Ukraine. All right, well, let's look at something. Here is the disposable income from consumers. You can see this line back all the way to 1960, 1959. Here's what happens. Disposable income. It's rose over time because people were working maybe more, you know, keeping their money, doing whatever. But this is just the normal range that it increases. Then all of a sudden, whoa, what happened here? 2020, we see a huge spike. And then 2021, even more, the highest ever in history. Let's look at this. Look at this spike. Here's the path it should be following, and here's what happened. Okay, so that's my confirmation that in 2020 and 2021, a lot of the relief money was actually put into savings. okay? And there's studies to prove that. But, so what would you do in this situation? Well, if you're in California, you'd send out more stimulus checks, okay? Absurdity, insanity. What do you do if you're falling behind in the polls and it's maybe an election year? Well, you send out stimulus checks. Just insanity. If we already have inflation completely out of whack, why would you pump more money into the system? Whatever. Well, that being said, that's our news for today. What's going on with mortgage rates? Well, let's refresh this because it is a volatile market because Federal Chairman Powell is speaking. So here's what's going on with the MBS market. This is the bond that trades on Wall Street that gives me a guide on what's going to happen with mortgage rates probably an hour or two from now. Okay, this is my little crystal ball into this system. As this number right here goes down, this is the price of the bond. As this number goes down, rates go up. The further it goes down, the further that up adjustment in mortgage rates. So we love when we love when this number goes up because what happens then? Mortgage rates come down. We can see over the past year, well, I'll say the past 6 months, let's look at this. The past 6 months, you have nothing but red other than the little cells down through here. Okay, but we're starting to get a little stability because if you look at, if you look at a little further out, you can see a complete crash from here to here. As we've seen, because mortgage rates basically doubled since the beginning of the year. So where are mortgage rates right now? Well, this is a publication from Mortgage News Daily. This is not a lender's rate sheet. This is not my rate sheet. These are the national averages, okay? Just giving you in tune of where rates kind of are. I'm sure this isn't your rate, but what I want you to focus in on is the adjustment, the daily changes, okay? What's happening daily? So this is saying right across here, if you look at all these, everything was up yesterday, okay? Well, based on the news we have today and this chart here, we should have a flat day, thank goodness. But here's where mortgage rates are. I'll go through them real quick to read this for you. But you can see down through here as well, the 52-week high and low down through here. Look at this, we're off the highs, thank goodness, but we're double the lows. Okay, that's the concerning part, but we're starting, thank goodness, to start to stabilize. So the 30-year fixed rate, I'm going to read this right here, is right now at 5.95. It is up 0.07 from the day before. We call that 7 basis points. So that's how you read this. So let's, for example, we'll scroll down to this VA. I don't know why the VA rates on here are so volatile, but they are. But let's say, for example, you applied for a VA loan yesterday, but you didn't lock in. Well, your rate is probably going to be 0.15, about an eighth higher today. So that's why I can keep pleading to people, please, follow this stuff so you can lock in at the right time. That's where we come into play. So my name is Dan Frio. I run the Freo Team. We are now a federally chartered team, so we can help you anywhere in the country. What we can do for you is we scan the whole country to find you guys the best rate, the best program. So how this works is you want to apply for a mortgage. So you go to the bank, you apply for a mortgage, and the bank gets your stuff, and they have one rate sheet and basically a couple programs. What we do for you, we scan the whole country, over 100 different lenders, to find out what the best program is for you, what the lowest rate is for you, and what the lowest cost structure is for you. I had somebody with a VA loan yesterday send me with the loan estimate that I asked you guys. I was able to reduce their rate by about 5/8 of a percent. Okay, and it was a substantial loan. So those are where, we come into play. We can help you shop the whole country with one application and one click. So, man, this sounds like an infomercial. I'm just trying to give you guys the information on what we do. So again, we're federally chartered. We can deal with you anywhere in the country. We even got a couple applications yesterday from Puerto Rico because I mentioned Puerto Rico, and that's what we do. So here's the 2 areas that we're really concentrating on now, or the biggest focus in on. Those out there building a house. It is concerning, it's frustrating, it's nerve-wracking because it's going to take you 6 months or a year to build that house. Where rate's going to be in 6 months? So we have a extended lock program for you guys out there. We can lock you up to 6 months with no cost, no fees, no application fee or anything. We can lock you in. That's your safety net. If rates go up, you're good. If rates come back down, we'll renegotiate with that lender because they all have float down options to get you the current market rate right before we close. So that's what we can do. If you're out there and you're like, hey, we're starting to shop for a house, but these rates jumping all over the place are really making me nervous, we have a solution for you. It is called our lock in shop. So you can lock in today as you go out there in the environment and search for your dream house. So those are our 2 biggest programs. But if you're in need of a reverse first mortgage, a debt consolidation mortgage, maybe an investor loan like a DSCR. If you don't know what I'm talking about there, check out my DSCR videos, and much, much more. So we'd love to help. You can get a hold of us by going to therateupdate.com. Right over here is all the information you need. You can call us, you can schedule a meeting, or you can even now chat with us. So check it out. Also, if you like my information, don't forget to subscribe to the newsletter down below. It's free. There's no cost. They don't sell the data, and you have nothing to worry about there. It's just for your information. So God bless, guys. Thanks for watching. I'll see you later today. I'll do an update about midday after Federal Chairman Powell speaks, and then I'll give you an update on what the market's doing. So God bless. Have a great afternoon. I'll see you soon. Bye-bye.